All right, guys, what's going on? Just gonna do a quick afternoon update. I'll probably hop on here later. I actually have to go to a dentist appointment in a little bit, so I'll keep this short and sweet. So I'm gonna just cover some of the stuff I was talking about with BTC in the Telegram yesterday, in particular, the levels and just the idea behind why that level is important, and some thoughts going into tomorrow. Just to be clear, not really again like chomping at the bit for any particular setup going into FOMC. It's a coin flip. I don't think it's really ever smart to hold any kind of strong ideas into economic events or or any kind of major catalyst. So there's a little bit, maybe a little bit of meat on the bone between now and then, but definitely nothing to get too excited about. So the first thing I'll go over is just that 58.6 level, and the idea behind why that was the level that I was waiting for, as I mentioned yesterday again, or the level, sort of the line in the sand of where I might get bullish and where I would reconsider potential long setup. So what we're looking at right here is just a daily chart. Then we have a 30-minute chart with the TPOs and just a 5-minute chart to monitor sort of lower time frame price action and refine entries. So just coming off of really quick this setup, we ended up pulling back a little bit deeper than I found comfortable to just get involved off of a pullback alone. I like to see a little bit of constructive development, especially when we're looking at a structure that really hasn't changed a whole lot. And add that to the fact that we are, again, going into something that there's a decent amount of uncertainty around, regardless of what you see on the timeline from crypto Twitter. So we did have 3 green days. We did have 3 red days in a row. Ended up pretty much closing out this entire gap, filled that out for a little bit, but then pushed it a little bit lower below that Friday low. So we broke below that Friday low, and we got that weekly VWAP retest, which is good. But I never just buy that alone, unless like I try to make this a little bit clear. Unless we're in a really strong trend, whether it's a strong intraday trend through a level, as I mentioned with the ES, if we broke yesterday I was talking about this. If we broke highs and then we had a retest of session VWAP, so regular trading hour VWAP, probably look to buy that indiscriminately, anticipating at least one strong move off of that. And then if we are in a strong trend on a higher time frame chart on a weekly basis, not within structure, still not bracketed within high time frame structure, if we do ever break out through a level and we pull back to that weekly VWAP, then I'll be a little bit loose, or I guess a little bit more cavalier about just buying that level without doing too much thought, or rather, I guess, requiring a lot from price. Having specific and very strict criteria for entry. But right now, I still think okay, we're still making lower highs. We're still making lower lows on a closing basis. Like, price has to do a decent amount to prove itself. And I do think when we are tightening up like this, it does make it a little bit easier, because when you're trading within a tighter and tighter range, you can see emotions are ping-ponging back and forth with that. The invalidations are very close, right? So if we've been trading within a couple 1,000 point range, in this case, not a couple, it's like 5,000 points at this point, or even more. If that continues to tighten, like if we're on one side of that, if it's very clear on one side of that constructively, and it's not like something that's very brief on the low time frames, or holding a level, or seeing a change in activity, a change in supply and demand behavior, then okay, well, that's it. But we're still kind of more or less doing the same thing, but on a smaller and smaller scale, and bouncing less and less each time. So I'm not saying that this is going to bounce less. I'm just saying, hey, that's been the case. So I'm not going to get over my skis about any kind of move. And again, any kind of move into what we have tomorrow, more specifically. I think after the FOMC, what you want to do is you wait. It's like 48 hours usually before the market is really honest about what it thinks about whatever it's digested, whatever is disseminated, in this case, a rate cut, whether or not it's 25, whether or not it's 50, whatever. So either way, so we got that pullback We didn't have follow through those lows. We never cascaded, never traded lower, so that's good. We got a bounce here. But I said I wasn't interested in getting involved until we trade back above POC. And that's just the idea that, okay, the market pulls back. We see a good amount of movement into this low, a good amount of volume into that low. And what I want to see is that prices rebid sort of the same way, like think of this as a high time frame application of what I was talking about with the footprint chart. So you get a lot of volume coming in towards the low. You want to see the prices suddenly trading constructively above where that volume came in. And then you can make a good case for sort of a shift in control and one side of the market being offsides and potentially squeeze worthy. So for me, that was the point of control of that day. It was traded towards the highs, market marked down. You can see how VWAP evolved. You can think of VWAP as like dynamic point of control, right? So how point of control has evolved throughout the day. It's a little bit different. Obviously, the POC is going to be static. It's going to be where the highest volume node is. There might be another high volume node that's just marginally smaller that's could be equally important, right? But in this case, I said 58.6. So we traded lower, right? We had a couple attempts towards those lows, and then the market ended up trading back above prior day's VWAP and then traded back above that POC. And you're putting basically the entirety of that day underwater anyone who was very aggressive towards the lows. And there were some sharp moves down. So you could see any kind of grind up was undone rather quickly. So we liquidated a good amount of longs in this case, and then had that strong reversal back above that level. And that was kind of it. I mean, we had 3 red days, so we're on the 4th day, right? And it's if you look at from a statistical standpoint, if you look at the amount of times that we've had a 4th red day into a media area. So again, this is off of 3 red days. We haven't moved back above prior day's POC, trading back above all the levels that we were having a lot of trouble with. And you could just say, hey, well, between 58.3 and 57.6, well, we're clearly trading back above that. There's a shift in control. And then you just have what is constructive price action higher. So you have a spike above the prior day's highs, and you have this slightly marginally higher lows that are forming, and you're holding, in this case, it's 1 standard deviation above session VWAP. You're holding that, and usually you're going to see that in a strong intraday trend, and the same way that you would sort of scale that up for a strong weekly trend. So this is a decent signal to get long to trade around the same setup that I talked about the day prior. So the day prior was talking about filling out. So if we had filled out this move, if we had filled out that Friday structure, so Friday the 13th move up, found established value within that gap. If we traded back above after, or so if we created I forgot what the criteria was for that setup because that was a day before that. And we ended up moving down lower and never really gave the setup. But the point was the trade would be back to the underside of this range and ultimately to clean up these highs. So I mentioned, the importance of these highs. So if you're looking at just a little zoomed in, there are unfinished highs up here. So no excess. So you have basically 2 days in a row that are, a hair within each other, no probe above the level. It's very rare for a market to leave that behind. The important thing is you're never just looking at this like, okay, we have to go there. I had said if there are times when if I'm long and price action is wishy-washy and we haven't done anything to really change, like we're just still bracketed, it will sort of sway my confidence in favor of holding out, expecting that we're at least going to tag those highs, even if we get some kind of reversal. It's just unlikely you're going to leave this liquidity pool up and you're going to leave that area untested and allow someone to just kind of walk into the market and sell this down and never revisit or push against that positioning, especially in this market because we know it's very PVP and where positioning comes into the market, it's really easy for a larger entity to sort of push this market around and force those players to make a decision, whether voluntarily or stop them out involuntarily. That's what I mean when I say involuntary versus voluntary changing in position and activity, for those of you who are uncertain about that. So we ended up cleaning those highs. Now, in this case, the same thing can apply for if you're new to the trade, if you haven't been in position, if you were not long, and it wasn't a matter of, okay, this is going to hold, allow me to hold out and remain confident around this, maybe seeing continuation. For the particular trade where the lows were initially targeted, the other trade was if we accepted back within that 2-day value, treating those highs as sort of a further target or ultimate target rather than just the high of value. As I'm recording this, I'm doing a lot of gestures as if you guys can even see me. But so you had that setup that you had to be pretty confident in if you were just holding through the underside of the structure to trade towards those highs, or you had the one-to-one setup between trading back within value, so back like 59.8, to ultimately take the highs at like 60,600. So we're trading back above there now. I think again, we're going into FOMC. Where's the market right now? The market is trading slightly lower highs, 60,756. You do have this single print gap, so you had stops blown out. A lot of times when you get those single prints through a level like this, those are an indication the market ripped through there on liquidations, on stops. So when you do return to that level, where are there stops? There are also people that are probably not stopped out and will look to make a decision if you get back to there. So if you're looking for some kind of rebid, you do want to see it literally right here. So you do want to see that this level holds. If you're going to see continuation, this should be the level in the short term that you get it from. But it also happens to be it's the multi-day highs that we're looking at. So going into FOMC, I wouldn't want to see this if I'm long right now. My criteria would probably be right above these highs holding. You don't want to start to see this start to unravel again into the later sessions, into the Asia session, going into FOMC tomorrow, and trading back within the confines of like 60,600 and the gap that goes more or less down to 59,400. There's a little bit of meat there, right? There's this little bit of consolidation, but that's not really much. And the what has happened over the last couple months is anytime you've had any kind of imbalance move up or down, the market has traded back through those levels and filled those levels out. So it's unlikely we're sort of looking at a getaway market right now. If this was post FOMC and markets looked good and we didn't also have what we have right now, which is equities have sort of undid the move from this morning, then maybe it'd be a different situation. But I am considering like, okay, the FOMC is some kind of like resistance in and of itself. And I just wouldn't want to hold anything too long into that or force anything into that. So that's the point. There's something I wanted to talk about earlier, and it was about position sizing and adapting to drawdowns. I do think that that's something that's really important to touch on. And this is like from a prior prop standpoint. And how a lot of like more professional traders that I know also worked with traded. It's sort of their approach loosely as well. So everyone has their own system, but this is, I think, something that anyone can borrow from and anyone can apply. Despite what you see on Twitter, losses are obviously a massive part of trading. Everyone goes to drawdown periods. Everyone has periods where they fucking can't hit anything, can't hit the broadside of a barn. Anyone who says that they don't is just it's a sign that they're absolutely LARPing. Like I go from periods where my win rate is like a coin flip to maybe at best like 75%. There's times when I'm scalping like intraday. I might have a week where it's like, oh my God, I'm hitting everything. But that's just that part of the distribution that's a greater distribution where it's more, it's not normally 90%, right? It's not normally 80%. And I go through periods where I'm in drawdown, right? Now I understand my system. I understand like my own trading, like the back of my hand, obviously. So I know, okay, there's expected losses that I should incur. And then I know there's a threshold that I'll break. And that might mean that, okay, that's not even just what I can expect. This is something that might be worth fixing at this point. Like this is beyond my normal pattern of expected losses or what I have just for myself as norms. So we all, like any trader has been there. Anyone who says that they're not or they don't is just full of shit. And if you trade, for multiple years, you're going to have these periods, at least once a year, twice a year, 3 times a year. And everyone makes the same mistakes, right? It's like same thing happens, overconfidence, sizing up too much, not putting on enough when you should, not getting behind sort of the A-plus setups or great opportunities, taking profits too early, all of that. Not giving trades like sort of the breathing room they need. So one thing that you have to do, obviously, like most importantly, this is why journaling is so important, because you have like a clear understanding of your system. When you're faced with the numbers, when you're faced with the data, like if you're going to deny it at that point, like you're just not going to make it. Like you're a fucking idiot if you're going to stand in the face of the data and say, that's not the case. So you have to accept it, right? If it's beyond your expected losses, then obviously you have to sort of dig into it. Am I different? Am I off? Or is the market different? Is the regime different? Is this edge no longer there? Um, if a lot of the cases, it's a lot. One of the thing as discretionary traders we have to deal with is that it's discretion, right? It's our own wetware, getting involved and fucking things up. So when this happens, when you go into drawdown, you have to just basically get back to basics. You have to get back to basics. You have to find your cadence again or find your rhythm, whatever you want to say, and you have to do things that build your confidence, right? This might mean that if you have like 10 different setups or a bunch of different edges, that you only play or only take the trades that are your number one setup, right? And maybe they come like super few and far between. So there's a big space between them. Like it's not often that you get them, but you're just waiting for that one because you know that that's something that's a fat pitch that you can hit. There are certain rules that you can follow. For me, it's 3 losses, 4 wins, right? So whatever my normal per trade risk is, let's say it's $500,000 to use a large number, right? If I end up, if I am in drawdown and I end up winning or hitting 4 trades in a row, or one. So if I'm in drawdown, I'm cutting my, or if I'm in drawdown, or if I've broken my sort of normal expected amount of losses, I'll cut down my size at least half, right? So I'll cut down my size at least half. So if it's, what would we say, 500,000, I'll cut it down to 250,000. And these numbers are just bullshit out there, right? I'm not taking, scalps and risking $500,000, but big meaty numbers kind of stand out. So if I am past my expected amount of losses, if I'm in drawdown, if I can't fucking hit anything, I'm absolutely cutting down my size in half. To get back up to my full size again, I have to hit 4 trades in a row. All right. If I and this is where you're just looking to hit singles. If I end up losing 3 trades in a row, I cut half again. Right. If I continue to lose 3 trades in a row, I cut half again. And this could continue, obviously ad infinitum. And if it continues and you're having down all the way down, then clearly there's something else you need to fix. But the point is, what you want to do is when you're in these drawdowns, you don't want to just take every single trade you get again. You want to do something that does build your confidence back up, because that's a lot of times, like when your confidence is hit, and this is along the lines of what I posted the other day about your forebrain, your prefrontal cortex, and that taking too many losses and really affecting you. Regardless of what the market's doing, regardless of the other setups, you want to just, when you're in this drawdown period, you want to just take, maybe it's like 1 setup, 2 setups, 3 setups, edges, whatever. The ones that are your pocket aces, right, your best hands, you only want to look for those, and you only want to trade those. And you have to understand that, yeah, you might be missing out on something else, but this isn't really at this point about making money as much as it is about getting some hits under your belt again. These could be small trades, right? But the idea is just starting to like lock in wins again and to build confidence. And that's why I always say hit singles, right? Finding sort of like getting back into your groove. So this is a good approach that I've used, right? So my position sizing is informed by sort of the frequency of losses or wins if I am in drawdown, and I have to get myself out of that by doing things that sort of prove to myself that I can trade, right? The same thing for anyone else. And again, I think the important thing is it's not just like, all right, I'm going to sit at the desk until I either have my account down, I have my risk levels down all the way down to zero, or until I just am hitting X amount of trades in a row that allow me to get back to full size. The important criteria, I think, is when you are taking risk off and you are reducing the amount of risk, that when you do re-enter the market, you're doing it on a much stricter basis, right? So you're taking like the most obvious, easy setups you could possibly take. Maybe they're crap. Maybe they're just 2-to-1 trades and it's really nothing. 1-to-1 trades. Maybe it's like as simple as like something that is really easy to trade, which is like an failed inside day setup, or a break from value back to prior days, whatever it is. Like it could be something really It could be something really insignificant, but okay, this is like something that I hit all the time. I don't hit it like out of the park, but it's something that I can add up with. So I think that that's really useful. I think that the important part about it though is like just building your confidence, because once your confidence is broken, people can really spiral out of control if they can't disconnect from that and walk away. And I do think it's important to step away. Some people have like a max loss limit. That's from prop. We used to have max loss. Before you're going to get a tap on the shoulder, but it's not maybe necessary that you have to always walk away. You should have a sort of a basis for how you reapproach the market as well, right? And it can't just be I'm just going to get jump back in and get re-involved. Uh, so yeah, hopefully that helps. Anyway, it's 20 minutes long now. I'm going to let this go, and we'll see about an update later. There's not a whole lot that's worth going over into FOMC because I've already said my thoughts going into FOMC, and you can't really change too much of that right now. Like the market's not going to do anything that I think like will completely shift my opinion or how I'm going to position, which is just never position into events like this. And that's it. Talk to you guys later.